We do have some members on the way, members of the committee, but we also have a presenter, Assemblymember Perez, who needs to leave this morning on some business, so we are going to start as a subcommittee. If you don't mind, Assemblymember, please come forward, present your legislation, and then we will take the vote up when we have a quorum.
Thank you very much, Mr. Chairman. Thank you very much, Mr. Chairman. AB 1447 clarifies that the State Compensation Insurance Fund, or SCIF, is a state agency only for the purposes of auditing provisions of the Government Code. It also updates SCIF's advertising disclosures to state that SCIF is, quote, a self-supported and not funded by the state of California, end quote, as opposed to stating that SCIF is not a branch of the state. There's some ambiguity about whether or not the Bureau of State Audits can audit SCIF because the statute that gives the BSA its auditing authority does not specifically define SCIF as a state agency. SB 1452 by then Senator Speer, chaptered in 2006, the Omnibus Audit Accountability Act of 2006, attempted to make SCIF subject of audits by the state auditor. However, it's not entirely certain that SCIF would be subject to any audit by the BSA without expressly classifying SCIF as a state agency. The people of California are best served when state agencies conduct their operations openly and transparently. The state auditor's primary responsibility is to ensure that government agencies are conducting their business in a manner that reflects the faith and trust that the citizens of California have placed in their civil servants. This bill will make SCIF more accountable by clarifying in state law that it is a state agency as defined by the Government Code, Section 11,000, and is subject to the same oversight requirements of any other state agency. It will further ensure that any advertisement distributed by SCIF will include a more accurate disclosure about its unique relationship with the state. I respectfully ask for your aye vote.
Thank you, Mr. Perez. We have anyone here that would like to speak in favor?
Mr. Chairman, members, George Miller on behalf of the State Compensation Insurance Fund. We're happy to work with the Assemblyman in clarifying what we thought took place in Senator Speer's bill, but we're happy to clear up that ambiguity, and we're appreciative of his willingness to also deal with the advertising issue that we've come across from time to time.
Thank you, Mr. Miller. Any others would like to testify in support? Anyone here would like to testify in opposition? Okay, seeing and hearing none, we are still operating as a subcommittee, so we will, the motion will be due pass once we do have a quorum, and we'll take the vote out then. Yes, sir. Mr. Cox.
SCIF is under the jurisdiction, if you will, and control of the insurance commissioner. And I'm wondering why we need additional audits relative to its operation of business.
Thank you, Senator. The intent of the legislation is to add clarity for what we already thought had been taken care of through previous legislation. So 1447 only clarifies what 1452 intended. The other issue is, quite frankly, that we believe that the Insurance Commission deals with insurance in general, but the Bureau of State Audits has specific responsibility for state agencies, and because of SCIF's unique position in both worlds, we thought it best to make sure that we were explicit in authorizing the BSA to have those audit controls. But this doesn't do anything new. It only clarifies what was already the intent of SB 1452. And even SCIF agrees that it's subject to audits by the BSA now, and so we're only looking to get that clarification in the law.
Is it your the purpose of the audit for the purpose of the actuarial soundness of their rate making?
Maybe I should try and address that. Senator, no, actually I think the purpose of the audit is in the event that JLAC asked the Bureau of State Audits to Ms. Howell to look at certain aspects that have been brought to their attention.
Sponsor this bill?
No, we're not.
But SCIF has been working with my office, and it had been a concern. When I first introduced this bill, Senator, I was a member of JLAC at the time, I have since stepped off the committee so another member could serve, but it was my intent to make sure that we had the broadest ability to conduct audits wherever we felt was consistent with the interests of the people. I do understand that the Department of Insurance does have some regulatory auditing, but because SCIF is in both worlds, we wanted to make sure that we had the ability to conduct those audits.
Mr. Chairman, at appropriate time, I will in fact support the bill, but I am concerned about the overlapping, the overlapping that is occurring as a result of different jurisdictions becoming involved, and all of a sudden now the cost of business just goes up in the state of California relative to the overlaps, and intentions may be good, and I'm going to support this, but I do have some doubts and reserve the right to vote no on it at a later time.
And obviously, we are in a time when we're looking at consolidating as opposed to expanding programs. So we'll keep that in mind. Thank you.
Thank you very much.
Yes.
Thank you, Senator.
Do we have Mr. Nava?
Thank you, Mr. Chairman.
You'll be presenting AB 1214.
An abbreviated version,
Very good.
in the interest of time.
And you're offering up an amendment?
That is correct. We'd agree to accept as author's amendments to delete subsection B on page 2 of the bill, lines 10 through 16.
Subsection B. Okay. Okay. Please proceed.
Thank you. And in the interest of time, I'll be very brief. Assembly Bill 1214 clarifies that privately owned resources hired by insurers must obey the directions, including evacuation orders given by an incident commander. It also requires that all privately owned or operated resources must report to the incident commander upon arriving at a fire site. We respectfully ask for an aye vote, and we have witnesses in support.
Thank you, Mr. Nava. Witnesses in support?
Terry McHale with Aaron Reed and Associates, representing CDF firefighters. Thank you very much to the committee and their patience on this. We tried to do two bills in one, essentially. There are these huge fires. We want to accommodate the insurance industry on this. Fire and insurance are working closely, and we expect we'll work with the adjuster component next year. So thank you very much. We ask for an aye vote.
Thank you very much. Others in support?
Yes, Afrak Vargas. I'm with the California State Firefighters Association. I'd like to meet too what my friend here, Terry McHale, said, and we're requestfully respect an aye vote. Thank you.
Thank you. Anyone else here would like to testify in support? Anyone in opposition? Seeing and hearing none, we will make a motion as when we have a quorum. Thank you.
Thank you.
Okay. I believe we have a quorum. Not yet? 1, 2, 3, 4, 5.
Mr. Chairman,
Yes.
may I inquire as to that the Nava bill was on support, was on consent, was it not?
It was, and I believe we pulled it off.
Oh, I
because of
see.
the-
All right.
Because of the amendment, yes.
I see. All right.
Thank you, Mr. Brown. Oh, okay, so we need 7. Okay. Okay, do we have Mr. Fewer? Mr. Mendoza? Mr. Jones? Buchanan? Fuentes?
Good afternoon, Mr. Chair, members. I'm presenting today on Assembly Bill 1117. It's a technical bill that would amend the State Compensation Insurance Fund law so that the members of the SCIF Board of Directors are not incorrectly disqualified from participating in important decisions of the board that may impact policyholders generally, but no board member uniquely. This bill is technical in nature and does not change SCIF law. At this time, I would like to accept the committee's suggested amendments that would base our bill's conflict of interest principles on the substantive law governing financial conflict of interest for SCIF board members, assuming that the state controls SCIF in the next year or so. With your support, I do have a witness in support. Mr. George Miller's here to testify on behalf of SCIF.
Thank you.
Mr. Chairman, members, George Miller on behalf of the State Compensation Insurance Fund. We brought this bill to Mr. Fuentes early in the year, asked him to carry it on an urgency basis. There appears to be some confusion amongst individuals within the fund and outside the fund regarding the law that was enacted last year regarding the expansion of board members and non-policyholders and policyholders sitting on the board, and that law allowed for policyholders to sit on the board as well as take place in making decisions on a global perspective regarding rates and what have you. Since then, for instance, our chairperson is a member, works for the Chamber of Commerce. As there are existing contracts for insurance for their association or what have you come up for renewal, then it wasn't in existence at the time that the law was passed last year, and this just merely changes it to account for renewals or amendments to the contracts that exist currently and allow them to act on rate filings and what have you.
Very good. Thank you. Any others would like to speak in support of this measure? Anybody would like to testify in opposition? Seeing and hearing none. Sir, Mr. Harmon.
I was looking at the bill on page 4 at line 24, 25. It talks about it exempts someone that is an officer or employee. What about a self-employed person? I was self-employed at one time. I was insured by state comp at one time. So do you want to cover self-employed people? It looks like it limits it to people that are where it exists in a minute. Any member of the board of directors is an officer or an employee. It's limited to officer or employee.
The provision is in the amendment. I understand, and that addresses that issue.
Oh, is it?
Yes.
All right. Very good. Thank you.
Answer that.
We'll have our consultant speak to that.
Mr. Harmon, the language you identify in the bill, is the language that's being amended, and it states there, purposes of board actions affecting generally applicable rates, a member of the board of directors shall not be deemed to have a financial interest in a contract of insurance between the State Comp Insurance Fund and an organization of which any member of the board of directors is an owner. Officer or employee.
Got it.
So they've cleaned that up.
That would include self.
Thank you.
Great minds think alike. Thank you.
Great. We do have a quorum. If we could take a moment to establish our quorum, please call the roll.
Calderon.
Here.
Calderon here. Cogdill. Cogdill here. Correa. Cox. Cox here. Flores. Harmon. Here. Harmon here. Kehoe. Liu. Lowenthal. Here. Lowenthal here. Padilla. Runner. Here. Runner here. Walk. Here. Walk here.
Very well. Thank you. We do have a due pass recommendation. Do I have a motion on this bill? So moved. And due pass as amended. Call the roll.
Calderon.
Aye.
Calderon, aye. Cogdill. Cogdill, aye. Correa. Cox. Cox, aye. Flores. Harmon. Harmon, aye. Kehoe. Liu. Lowenthal. Lowenthal, aye. Padilla. Runner. Runner, aye. Walk. Walk, aye. That's 7.
Measure is out. Thank you very much. We'll keep it open for some other members. Mr. Fuhr, welcome.
Thank you very much, Mr. Chair.
Please proceed.
Thank you. Mr. Chair, members of the committee, I have a very disruptive and ornery group with me. They're messing with the furniture here. It's good to be here on a bill that is, I think, uncontroversial and important at the same time. It's a bill about reverse mortgages. We all know that there are many benefits to reverse mortgages for seniors, but there are also serious risks involved, and it's important that consumers be fully apprised of the risks inherent in this process before they move forward. So the bill does 3 things regarding California's existing reverse mortgage law. First, it incorporates recent federal rule changes to reduce conflicts of interest and restrict the cross-selling of reverse mortgages and other financial products. Second, it ensures that the important protections of federal law apply in California both to federally backed loans and proprietary loans. And third, it provides important embellishments to existing notice requirements to consumers by requiring that there be a checklist to potential borrowers to review the issues that are inherent in any prudent selection of a reverse mortgage. The bill has evolved over time, so we have no opposition to the bill. It's supported by a very large coalition of senior and consumer groups, and I would urge your support for this important, but as I say now, uncontroversial measure.
Thank you for bringing this to us. Mr. Feuer, do you have anyone here who'd like to testify?
I do.
In support?
Please.
Please proceed, sir.
Thank you, Mr. Chairman. My name is Jack Christie. I represent Aging Services of California. We are an association that represents not-for-profit providers of affordable housing, assisted living, and continuing care retirement communities. We're in strong support of AB 329. I'd remind the committee that there's over $4 trillion of age 65 plus homeowner equity in America, and we saw the predatory tactics used in the subprime loan. We've got to protect seniors from the same kind of tactics. The incentives that made subprime loans attractive, large upfront fees and virtually guaranteed loan that you cannot lose on, are also attached to these reverse mortgages, making it a prime area for these out-of-work subprime mortgagers to go to work on. We appreciate the checklist. We think this is a good start, a small speed bump to slow down the erroneous sale of one of these mortgages. And we like the conflict of interest rules, the integrity rules. So this is a small speed bump that's necessary in California, and we urge the committee to support this bill.
Very well, thank you. Any others?
Thank you, Mr. Chair. I'm Prescott Cole, Senior Staff Attorney with Cantor, California Advocates for Nursing Home Reform. We are watching this market, and as Jack Christie has mentioned, it's a $4 trillion set of money that's out there. We have been involved with financial elder abuse for a number of years. Our organization is tracking a number of studies. A recent study came out from the University of Iowa that says about a third, 35 to 40% of our seniors have lost their ability to do a lot of critical thinking. Now they make their decisions based on reward, repetition, reward, repetition. The industry is doing an awful lot of advertising. And if all you hear is the very positive things about reverse mortgages, they're not questioning the downside. So what this bill does is it makes a checklist available to seniors so they can see some very real downsides. The primary things that we're very happy about this bill is, number one, it talks about the fact that the seniors have to maintain the upkeep of the house. If they don't, they'll be foreclosed on. And also, it's very important in this bill, the bill brings out that when the last borrower dies, mom and dad dies, mom dies, anybody else living in the house, this could be adult seniors with disabilities, everybody will be faced with leaving the house because of the high cost of the loan. There's no way that the family can pay off the loan. They'll be foreclosed on, and this is going to end up in the state's lap because people who are disabled, people who can't take care of themselves, will end up on government benefits. We're very supportive of this attempt, and we hope that there'll be more in the future. Thank you very much. We urge an aye vote.
Thank you. Any others come forward speaking in support?
My name is Sherry Jenkins. I'm with the California Senior Legislature. We are in support of this bill and urge your aye vote.
Marjorie Murray, California Alliance for Retired Americans. We are co-sponsor of this measure. We thank the Assembly member for bringing this bill forth. It provides important consumer protections for seniors and has already been referenced, create something of a speed bump to slow down the process a bit and to provide opportunities for consumer education and consumer protection. We urge an aye vote from the committee. Thank you.
Thank you.
Good afternoon, Mr. Chair and members. I'm Karen Rosh, representing AARP, and in support of the very important bill.
Thank you so much. Anyone else would like to come forward and speak in support? Any opposition? Seeing and hearing none. Do we have any questions by the committee?
Mr. Chairman, may I say to you that before my mom passed away at age 93, from time to time as we got together, she would say to me, I just wish you do-gooders would just stay out of my life. Just leave me alone and stop trying to help me so much because you're not. And I must tell you, I think this is one of those bills that that you heard and saw the testimony as to who's doing this. But I frankly didn't see a senior up here saying, I want you to do this because I'm concerned about this. And no, seniors, but representing very sort of, I'm talking about somebody like my mom who said to me, tell Mr. Lowenthal to stay out of my business. All right?
But Mr. Cox, he's such a sweet guy. She would never really say that.
Okay. Let me just tell you one thing. She'd have smacked you around in a real. Thank you, Mr. Chairman.
Sure, no problem. Any other comments, other members? Well, we appreciate you bringing this bill forward. This protection, along with Senator Woke's reverse mortgage bill, providing good faith dealing requirements and checklists that are required. Between the two of them, I think we have adequate protection for our seniors. Do we have a motion on the bill?
Move the bill.
Bill's moved. Call the roll.
Calderon?
Aye.
Calderon, aye. Cogdill? Cogdill, aye. Correa? Cox? No. Cox, no. Flores? Harmon? Aye. Harmon, aye. Kehoe? Liu? Lowenthal? Aye. Lowenthal, aye. Padilla? Runner? No. Runner, no. Walk? Aye. Walk, aye. The measure has 5-2.
5-2. We will keep that open. We'll keep the roll open on that. Need 2 more votes.
Thank you, Senators.
You're very welcome. Well, we still have a quorum. I'd like to take up our consent items.
Move consent.
So moved. Call the roll.
Cogdill?
Hold on. Let me announce the consent items. Item 4, 5, 6, 8. Now, I know we lost one of them, right?
Yeah, I took it off. It's 12.
Okay. 14 and 15.
And 12.
And 12.
And
11 was pulled.
11 was pulled. Very good. Call the roll.
Calderon?
Aye.
Calderon, aye. Cogdill? Cogdill, aye. Correa? Cox? Cox, aye. Flores? Harmon? Aye. Harmon, aye. Kehoe? Liu? Lowenthal? Aye. Lowenthal, aye. Padilla? Runner? Aye. Runner, aye. Wolk? Aye. Wolk, aye. That's 7 measures.
We'll keep that open. That does. Consent items are passed. Now we have Assemblymember Jones. Please come forward. You'll be presenting on AB 1179, motor vehicle insurance and damage assessments. Please proceed, sir.
Thank you very much, Mr. Chairman, Senators. AB 1179 simply notifies consumers that they have the right to obtain their own independent auto body repair estimate when attempting to repair a damaged automobile. They have this right even if they're pursuing an insurance claim to fix the vehicle, and they have the right even if they've been provided an estimate by an insurer. The bill simply makes explicit this notice by moving it into California's existing insurance code Consumer Bill of Rights. Insurers are currently required to provide claimants with the Bill of Rights so we can be assured that consumers have a complete understanding in the context of receiving from their insurer information as to what their rights are. This would add a fifth right, really provide notice of a fifth right that currently exists, that they have the right to seek and obtain an independent repair estimate directly from a registered auto body repair shop, even when pursuing an insurance claim for repair of that vehicle. I want to acknowledge my appreciation for all the time that the insurance industry has spent with my office in working out amendments to the bill to remove their opposition. I know the analysis still notes one opponent, but it's my understanding that they're going to clarify that, in fact, their opposition is removed. And so I'd ask for aye vote on AB 1179. We have some witnesses who'd like to speak in support.
I had a question.
Well, yes, sir. Mr. Harmon?
Assemblyman Jones, are you saying that the bill is going to be amended in the future? I didn't quite understand.
I'm sorry, sir. No, I took amendments in the Assembly that addressed the concerns of the opposition, and with that it was told the opposition would be removed in its entirety. And so we're not taking any further amendments, and it's my understanding we'll hear today that all of the opposition is indeed removed.
Yes,
thank you.
That's correct. Yes, Senator Cogdill.
Thank you. I was just wondering, is there anyone from ACIC in the audience that can speak to the removal of your opposition.
ACIC was one of the remaining oppositions, and with the amendments,
yeah, Mark, second on ACIC. We were okay with the concept of placing it in the Consumer Bill of Rights. We had some issues with the language, the way the bill was drafted after spending a lot of time with Assemblyman Jones's staff. I've seen the error of my ways and we're going to withdraw our opposition.
Very good. Thank you.
Thank you.
Any others like to testify in support? Bill's been moved.
Mr. Chair, members, Rosemary Shahan, President of Consumers for Auto Reliability and Safety. We believe the bill strikes the right balance and will clarify law for consumers, and we'd ask for your support.
Great, thank you.
Richard Steffen, representing the Collision Repair Association of California. We strongly support the bill. Thank you.
Jack Mullidonoff on behalf of the California Auto Body Association. We also support the bill. Thank you.
I remember you. Thank you very much. Okay, the bill's been moved. Let's call the roll.
Calderon.
Aye.
Calderon, aye. Cogdill. Cogdill, aye. Correa. Cox. Cox, aye. Flores. Harmon. Harmon, aye. Kehoe. Liu. Lowenthal. Padilla. Runner. Runner, aye. Wolk. Wolk, aye. That measure has 6 votes.
6 votes. Still short 1 vote. We'll keep the roll open.
Thank you very much, Mr. Chairman. Thank you, Senators. I want to thank the committee staff as well.
Welcome. Thank you. Next up is Assemblymember Mendoza, AB 377. Welcome, sir.
Thank you, Mr. Chair. Members, I'm here to present AB 377. I would first like to begin by noting that I will be accepting all of the committee's suggested amendments. AB 377 contains new regulations to provide new protections for payday loan consumers, many of them recommended by the California Department of Corporations report in 2007.
Hold on. Could we have them quiet down in the hallway? Could the sergeants go out there and try and calm them down a little bit? Thank you. Go ahead.
Thank you, Mr. Chair. Specifically, AB 377 will require lenders to offer a no-cost payment plan to consumers who cannot repay their loan on time, allowing them to pay it back in 4 installments and avoid extended credit problems. It also prohibits lenders from reporting customers who bounce checks to law enforcement. Gives consumers rights to rescind a transaction at no cost by the end of the next business day. It also toughens licensing requirements by including background checks on principals and managers, notification requirements, and fingerprints. AB 377 also expands existing rules designed to make sure consumers know the terms and costs of a payday loan. AB 377 ensures loan disclosures are separate from contracts and requires consumers to initial them to acknowledge they've been presented. Mandates all internet payday loan transactions adhere to all of the requirements, required disclosures of in-person transactions. Requires payday lenders pay for a financial literacy education fund to help consumers learn to make better financial choices. It raises the transaction limit to $500 to reflect California's high cost of living and be more responsive to the real world of short-term credit needs of our consumers. With me today to support this issue is Malachi Sekou Amen from the NAACP and also Julian Canet from the California Hispanic Chamber of Commerce.
Thank you, Mr. Mendoza. Yes, you have support?
Yes, sir. Thank you, Mr. Chairman and members. I'm Malachi Sekou Amen with California NAACP. NAACP is pleased to be here to support AB 377 because we believe payday lending is a valuable resource to the community given the lack of access to capital often in our communities. And it's one of the choices available to our community when they're in need of a short-term loan. NAACP has been involved in in providing financial literacy workshops and seminars to our community to teach our constituencies the ABCs of banking, including the responsible use of credit. We think AB 377 makes important changes to ensure consumer protections, as well as full disclosure to persons choosing to use a payday loan to meet their financial needs. And thank you, and I urge your aye vote.
Thank you very much. Others in support?
Yeah, Joey Kennedy, California Hispanic Chambers of Commerce. Mr. Chairman, members of the committee, the California Hispanic Chambers of Commerce supports AB 377. We feel that in these difficult economic times with financial options shrinking, consumers need access to reasonable and responsible short-term credit. For many consumers with bank accounts and steady sources of income, a payday loan is one of the few solutions they have for getting the small amount of money needed for an unexpected bill or short-term emergency to get them through to the next payday. AB 377 would improve the product for consumers, help ensure that it is offered and used responsibly, allow consumers with repayment problems to get a payment plan to help them avoid a cycle of debt, and put additional licensing and operation requirements on the payday loan industry. In addition to tightening regulations and expanding consumer protections on payday loans, AB 377 would raise the transaction limit to $500 to be more responsible to the real-world short-term credit needs of the consumers here in California. I'm also pleased to announce that numerous numbers of our local chambers are in support of this AB 377 as well. That includes the Regional Hispanic Chamber of Commerce in Long Beach, the LA Metropolitan Chamber of Commerce, and Hispanic Chamber of Commerce Silicon Valley, and the San Diego Hispanic Chamber of Commerce, just to mention a few. Thank you.
Thank you. Others in
Mr. Chairman, members, Chuck Cole on behalf of the California Financial Service Providers. We're the association that represents check cashers and deferred deposit transactors. I'd like to thank Assemblyman Mendoza for his efforts on this bill. We're pleased that it reflects many of the changes suggested by the Department of Corporation changes in their 2007 report. And we do believe, for the reasons previously stated, that it's an excellent measure for consumers, and it's one that can balance with the industry's best practices as well. So we'd like to thank him for the effort and thank the committee for its support.
Thank you, Mr. Cole.
Mr. Chairman, members, Paul Gladfelter representing Check and Go and Check into Cash. With your indulgence, it's always good to hear from people who use the product as opposed to paid advocates on behalf of a particular product. And we do have some customers here I know would like to say a few words about their needs and how they've used the product, if that's okay with you.
Certainly.
So for those of you who are in the audience that are with...
Can you come forward if you're here to speak in support of the measure?
Good morning, Board Chair. My name is Ernest Hales. I'm a customer with Check into Cash. I'm a single parent with a daughter in high school, so you know that expenses can arise for me. So when I go to the check cashing place to get a loan, it's a necessary thing for me. So I appreciate the respect I get. And not very often, but occasionally, I will need an increased, which is not available at this time. I know the board is voting on an increase of a loan amount. And occasionally, I do need a little more. But I'd just like to add that it is a good thing for the community. It's a good thing for me personally. So, all right.
Thank you, sir.
All right.
Madam?
My name is Pamela Wasmuth. My first experience with a check cashing place was when my mother died. And we had medical expenses, funeral expenses, and in the being involved in all of that, month-to-month expenses like utilities and such kind of fell by the wayside.
Sure.
So when it was a case of either writing a check for which I didn't have sufficient funds, and then facing bank fees, the utility fee, etc., that led me to the check advance, payroll advance place. Now, since then, I have had occasion to use it when my car died on the freeway, and it turned out to be irreparable. I needed down payment for a new car, and fortunately, was able to go and to get a payroll advance. However, yes, it would have been helpful if it had been more than what is the current limit, because then I was forced to do a yard sale and various other means of coming up with the other part and selling much of my property in order to come up with a down payment. So I appreciate you considering this bill, and it does help people from the day-to-day getting through each month, and especially with these economic times with people facing pay cuts, et cetera. It's definitely an added resource.
Thank you.
Thank
for
you.
your story. I appreciate that.
Good afternoon.
Yes.
My name is Alice Ford. I work for UPS as a part-time supervisor. In taking out a loan at the payday loans, it benefited me so much because I had 2 deaths, a son, a brother-in-law, and at the time we didn't have it. Husband lost his job, and to get a quick payday loan to help. The other thing is to increase it will keep me from, at that time I had to go to 2 to try to get what I needed. To increase it could help me and just pay one fee. Thank you.
Sure, thank you. Yes.
Hello, hi, good afternoon. My name is Rochelle Gloria, and like she said, I think it's better to increase from 255 to 255 to 500, because that way we have to go to 2 different stores. And like last year, my husband got laid off, and I stood up like the breadwinner or something. We have 3 kids, and yeah, it helped me a lot. That would help benefits everybody also. Thank you.
Thank you.
Hi, Mr. Chairman. My name is Renee Zaragoza, and I live in Woodland. And last year, I've used checking and cash also for payday loans. I quit my job because I had a baby, and I just didn't go back. And so my husband was, we were living on one income, so it helped a lot, to just go ahead and get a loan to help bills. And I mean, we're young, so it's just like, money doesn't come from everywhere, and it's not easy to, just to go ask for it. So, and it helped a lot to just, simply go and borrow it and pay it back when we can. So, and it would help if it increased too, because there's certain things that are just like, more expensive than other things. So it helps. So thank you.
Thank you for that. Yes.
Hi, my name is Daisy. Good afternoon to all of you. My experience with checking to cash was there was a time that because I have family abroad, and there was a time that they telephoned me and they had medical emergency, and I don't have anybody here in the United States, and I'm working, and at the same time I'm going to school, so I had nobody to turn to but check it to cash. So it really helped me a lot, and that's my experience.
Thank you for coming forward. Any others like to testify in support?
Yes. Yes, Mr. Chairman and members, Aaron Reed representing Community Financial Services Association. I know we're in the Me Too stage, so I'll be quick to say we support the bill. Randy Perry had been working this. He unfortunately has to be across town at a doctor's appointment, so you're stuck with me. Thank you.
Thank you. Do we have anyone that would like to come forward and speak in opposition to the bill?
Good afternoon, Mr. Chairman and members of the committee. I am Norma Garcia, Senior Attorney with Consumers Union. Consumers Union is the nonprofit publisher of Consumer Reports magazine and national consumer advocacy organization. In the interest of time, the opposition groups have coordinated our testimony to avoid repetition. I'm going to speak briefly and then turn it over to someone else. I want to speak first to the point about the value of payday lending. I mean, there is no question that there is a place in this world for short-term loans for people in need. But the question that we're considering today is whether or not this particular bill addresses the serious concerns with payday lending. What's wrong with the product? Does this bill address it? We think not. The problem with payday lending is that these loans are advertised in a way as a way to deal with occasional financial emergencies that most borrowers find themselves caught in long-term, high-cost debt traps. This is because the structure of payday lending business model sets these borrowers up for failure. AB 377 does not address the fundamental problems with the payday loan products, which result in borrowers being trapped in long-term debt. These include the high annual percentage rate on these loans, the short time period in which a borrower has to repay the debt in one balloon payment, the holding of a check or access to the borrower's bank account as collateral, and the lack of consideration of the borrower's true ability to repay the loan. These elements of payday loans cause borrowers to take one loan out after another without being able to fully retire their debt. As a result, the average payday borrower takes out 9 loans a year, and these loans tend to be taken out on a consecutive basis, which results in the borrower getting sucked into a cycle of debt they cannot escape. The bill as drafted doesn't adequately provide protections against these serious problems. I'm going to speak to a few of the problem areas, and my colleagues will address some of the others. But to point out a few, with respect to what is lacking, the Department of Corporations undertook an extensive study of the payday lending industry and the product and its effect on consumers. And in that study, they made several recommendations of how to make this product and this marketplace more fair for consumers. There are a number of these policy recommendations that were not included in this bill, which are critical to whether or not this bill is one that really helps payday customers. First of all, the bill does not adopt the DOC policy recommendation to require checks to be deferred for 31 days. This is extremely important, particularly so that people don't have to take out other loans within that short time period. Establishing a mandatory term of 31 days would reduce the cost of the loan to the consumer and increase the length of time to repay the loan. And this is a very important recommendation that AB 377 does not include. Secondly, the bill does not adopt the DOC policy.
In the DOC report,
yes,
didn't they indicate that the average loan was 16 days?
There are a number of different, depending on which state you're looking at, but the DOC report recommended that they look at a 31-day turnaround as the standard. The bill does not adopt the DOC policy recommendation.
Excuse me, Mr. Chairman. Can we get a little clarification there? It's generally 16 days in California.
That's the average, according to the DOC report.
Are you giving us information on the situation in California and what should be done in California, or more general?
In California, the DOC is recommending that there be at least 31 days for the term of the loan.
Okay.
This bill does not incorporate that recommendation, that policy recommendation. Additionally, the bill does not adopt the DOC policy recommendation to create automatic installment plans with a minimum of 6 monthly installment payments. The way the bill is structured, it would require that the consumer contact the payday lender to create an installment payment plan, and then it would only allow for a maximum of 4 monthly payments rather than the 6 monthly payments recommended by the Department of Corporations. Finally, the bill does not incorporate the DOC policy recommendation of expanding equitable remedies for consumer protections to help prevent any further harm against consumers in civil actions. The DOC recommended to amend Financial Code Section 23051 to allow the appointment of a receiver or conservator over the payday lender's assets and to allow requiring the payday lender to take remedial action in order to protect against harms in the civil arena. I will now pass the mic on to someone else who will address other issues.
Yes, Mr. Lowenthal.
Now I've identified, I think, 3 issues: the loan of 31 days, the term of the loan, the
deferral,
the automatic 6-month installment plan, I think, and the third issue.
It's equitable remedies.
Equitable remedies. If these were included, would you be in support?
That would definitely affect our interest, yes. We would probably move in. There are a couple other areas that still need to be worked out, but these are serious areas that, if these were included, it would...
We tried talking with them on these same issues, and they haven't. And then they keep moving the bar. Oh, well, we got more.
We'll get back to asking you whether these are doable, these 3, because that's the key 3 issues that have been raised.
There are other issues that will be raised, that I have raised.
Right.
Good morning.
Hold on, sir, just for a moment. Can you, where exactly is that 31-day recommendation on the Department of
I have the
Corporations
DOC. I don't have it here with me, but it's in my briefcase. If you like, I can.
We have a copy here. Maybe you could show it to us on our copy, because we can't seem to find that.
It's recommendation number 8 in the policy options. That's.
Oh, it's an option.
It's an option.
It's a policy
option. It's a policy option, not a recommendation.
Because on this product, I think it's based on a because people get paid every 2 weeks.
Right.
That's why they're using the average 16-day figure in the DOC report. And I do know that within the bill they do defer payment. They offer payment. I think a 4-payment plan.
Yes.
I don't know how long. We'll find out from other witnesses.
She wants 6.
The DOC recommended 6, a minimum of 6. And the page for the DOC report is on page 45.
It's an option. Okay, thank you. Yes, sir.
Good morning. My name is John Crancher. Good morning, Mr. Chair and honorable members. I'm here to represent the California Acorn. We must respectfully oppose this bill. AB 377 is not real reform. Payday lending institutions are predators. They prey on low-income communities. They prey on minorities, and they make predatory loans. AB 377 will make this product even more detrimental to our community. Increasing the loan limit from $300 to $500 makes no sense. It's hard enough to make ends meet when I already have to pay back $300 in 2 weeks. $500 would be virtually impossible and would leave me dependent on payday loans every time I got paid. It only widens the debt trap. The more money more money only ensures that the payday lending institutions can collect more interest. Further, AB 377 creates a highly flawed payment plan. Under the bill, I would be required to make a $75 out-of-the-pocket payment for a first installment if I was on a payment plan. The funny thing is, it's easier to take out a $300 loan since the cost of that is only $45. So if I'm short on cash and I need quick money, I'm going to just take out a new loan since 1, it costs less, and 2, it's not coming out of my pocket. In such great economic turmoil, and while working families are disproportionately being hit harder by the recession, we need to protect families and not throw them to the lions. The institutions already concentrate in low-income neighborhoods and are 8 times more likely to target poor minority communities than poor white communities. More reform would do something about the 459% interest the payday lenders are getting from borrowers annually. AB 367 totally misses the mark. For those reasons, I respectfully ask you, protect consumers and vote no on this matter. I have been telling my grandchildren for years that we no longer have loan sharks. We no longer have money lenders amongst us. That our government has taken care of making sure that the people that ripped us all back during the Depression, like we're now, the payday lenders, the money sharks, the guy that break your legs if you didn't pay him right. And then I walk down the street and I see Advance America, check into cash, payday lending. We should do something about this now, and this misses the mark. Thank you.
Thank you, sir. Yes.
Senator Calderon, I'm Paul Leonard. I'm the director of the California Office of the Center for Responsible Lending. To elaborate on some of the other comments that have been made, first off, I'd like to just put a point on what we know about payday lending that was described for us by the 2 reports that were issued by the Department of Corporations last year, and that really highlight the core problem of repeat borrowing for that payday lending. If payday lending was only about an occasional, one-time, short-term emergency as it's advertised, it wouldn't be a problem and we wouldn't be concerned about it, even with the high cost. But the problem is that these high-cost loans get rolled over and rolled over so that the high costs start to reflect the APRs that have been articulated here at 459%. When you look at closely at the Department of Corporations reports, and you look and you clean out the number of loans that are done by multiple persons in a household, you find that on a household basis, the average number of loans taken out is 10 per year. Which is nearly one a month, which suggests that, and again, most of those are repetitive borrowing, not spread out on a one-a-month basis, but which suggests that this is a product that's being used to solve an income problem, not to be solving a credit or a debt problem. Very few borrowers take out just one loan. Something like 4% of the loans are going to borrowers who are taking out one loan and done. And for a very, very small number of borrowers, you have an incredibly severe repeat borrowing problem. Literally, 4% of borrowers account for 25% of the more than 10 million payday loans that were originated in 2006, more than 25%. Want to sharpen the point from the fact that the payday lenders focused their locations in minority communities. We did a big report on that a couple of months ago. Also want to highlight what Julian Bond, the chair of the NAACP, had to say about that. And what he said was that study after study has demonstrated that payday lenders are concentrated in communities of color. Payday lending is an economic drain that threatens the livelihoods of hardworking families and strips wealth from entire communities. I also wanted to focus specifically on the amendment that's happened to the bill since it's come over, most notably the increase in the maximum loan limit. To sharpen my colleague from Acorn's point, if borrowers can't afford to pay back a $300 loan out of their next paycheck, simply because their household budgets are so thin and so tight that they're not able to squeeze out the full $300 a week or two later from when they took it out, the likelihood of them being able to afford a $500 loan and being able to pay that off out of one paycheck is even smaller. And we think that the higher loan limit is likely to exacerbate the problem of repeat borrowing, which is already quite severe. If you look at the typical budget of a household of $40,000, you find, and you look at what their household expenses are, we've provided this in our letter to the committee, what you find is that for that typical household and the typical budget, they can already come up $148 short of being able to pay back the full $300. If the loan amount was raised to $500, they would come up $348 short of their typical budget. Moreover, what we can learn from the DOC reports about the need for this higher loan limit is not at all encouraging or supportive of this idea. It's certainly asserted, and certainly many folks would like to get access to more money, and I understand that. But the reality is that only 2.4% of the borrowers of the largest payday lenders were found to have actually gone and taken out a second payday loan from another payday lender. And Lord knows there are plenty of payday lenders located close to one another. That's a hallmark of the industry structure, that if borrowers really needed more money, I'm sure that they would actually go out and get another payday loan. But in fact, only 2.4% of all of the borrowers in the 75% of the largest number, the 23 largest payday lenders in the state, ever have any simultaneous borrowing. The AMPG, the company with which the Department of Corporations contracted, also did a survey, and they found that 80% of the borrowers were happy with the amount of the loan that they got. Those who weren't and who wanted more, very, very few went to get additional payday loans. Instead, they do what most folks do in other places. They postponed borrowing. They did without, or they they got funding from family and friends. A responsible outcome. Finally, I want to point out what we know about the research on credit problems, because this reform and this product is being sold as a product that's going to help people with credit problems. In fact, there's a broad range of research that's been done that finds a correlation with that payday loans actually make borrowers' credit problems worse. To highlight a couple, number one, bankruptcy. Vanderbilt and University of Pennsylvania study, when they compared borrowers who got payday loans versus borrowers who were rejected for payday loans, they found a 90% higher likely incidence of bankruptcy, of filing Chapter 13 bankruptcy. A Harvard Business School study showed that payday loans lead to repeated overdrafts, bank overdrafts, because, of course, every payday loan borrower has to already have a checking account, and what they found that this contributes to the involuntary closure of bank accounts. Lots of other efforts in the state are going to get people connected to mainstream financial institutions. This product is weakening the ties to mainstream financial institutions. And finally, the Chicago Federal Reserve Board and researchers from Vanderbilt and the University of Pennsylvania also did another study that found that payday lending increases the likelihood of serious credit card delinquencies. Most payday borrowers have a credit card. Most of them can get more affordable credit and have credit balances, and yet choose to use this product that once you get into it, it's extraordinarily hard to get out. I would urge your opposition vote.
Yes, Senator Runner, I have a question.
Just a couple of observations. One is, I guess, in the amount. See, this is the first amount change I believe we've had since 1996. Is that correct? Mm-hmm. So it's been 13 years that it has been at that amount. So obviously, in terms of cost and value of dollars have changed. Now, and let me ask this question in regards to the nature of the service that's available. If the service isn't available, it seems to me that the alternatives to backfill that service become much less regulated, much more of the traditional kinds of things that take place oftentimes as we think about the abuse and misuse of individuals in poor neighborhoods, if indeed these were not available. Is that, I mean, what's the alternative? I understand the concerns, but what is the alternative?
Well, we've made reference in our materials to a study that was done by the University of North Carolina in a period in which that was done after the state of North Carolina essentially repealed the special payday authorization and allowed lenders to operate under the state's small loan law. And after they were able to chase out the payday lenders who continued to operate in North Carolina on the rent-a-charter model that was in effect until the FDIC shut that model down. What that study found is that, in fact, borrowers make do. Currently, 1/3 of the country lives in places that don't have payday loans.
So your answer is you believe that people should just make do then?
Well, that there are a variety of.
Let me just go to one other point then, and that is so your concern isn't the issue of the raising them from the 3 to 5. You don't believe they should exist at all?
No, I think that we should have small dollar loan products like the FDIC is sponsoring with that number of credit unions around the state, including the largest credit unions.
Yeah, but that's not my question. You don't believe this model should exist?
This model, as it exists today, I do not believe is an example of responsible allocation of credit.
Thanks.
Mr. Chairman and members, Brian Augusta on behalf of the California Reinvestment Coalition. I know we've heard a lot of testimony, so I will be brief. I just wanted to focus on one additional point that has been alluded to. We share the concerns of our colleagues about the bill that have been mentioned so far, particularly the expansion of the loan limit. I'm going to talk a little bit about the payment plan very briefly. I think there's a disconnect because in the official sort of selling point of payday loans is that they're for a one-time emergency use, but we know that most borrowers are repeat borrowers. The average number in California, as Mr. Leonard has mentioned, is 10. And so there is a PR problem there because it is not being used as a short-term, one-time, or infrequent product, but a repeat product. And so payment plans are being offered as a means of trying to provide a reform that will supposedly address that. But we know from experience in other states that have attempted to implement a payment plan that has not reduced the repeat borrowing. The average number of borrowers in that state, or the average number of loans per year in that state, is about comparable with the national average of 9. In a state where the average borrower borrows on average 10 loans a year, one payment plan in a 12-year period, which this bill would allow for, is still going to leave us a borrower with 9 on average loans, which will not have a payment plan, and which they will have to repay in the manner which borrowers tend to do it, which is to take out another loan to pay off their current one. So our concern is that by doing this, the payment plan, we put a gloss on the industry, but we don't really address the underlying issue of repeat borrowing and the debt trap. And for those reasons, as well as all the others that have been stated, we would urge a no vote.
Thank you. Senator Kehoe, you had a question.
Yeah, I do. I have several
Senator
questions. I think the woman from the Consumer Union was the one that I wanted to talk to. Did I see something in the analysis that said that you couldn't use the subsequent loan to pay off the first loan? No, okay. You mentioned 3 things.
3 things.
Adopt the requirement for the 31-day deferral, establish terms for repayment of 31 days. Are those 2 different things?
I'm sorry, 31-day.
You said that your first point was the Department of Corrections. Yeah. You did. You had 3 points.
Yes.
And if they're still in front of you, I'd just like a little clarification on what the 31-day deferral is.
All right.
Is that depositing the customer's check, or is that the repayment?
So the DOC policy option was that the checks, to require the checks to be deferred for 31 days, so that it would be a 31-day minimum, as opposed to what's currently happening now. To give,
Which is what? Their checks are being deposited when now?
it's pay period to pay period, so
every 2 weeks.
16, 15 days.
Yeah, and I'm not quite get. So how is the consumer benefit from that?
The benefit is that the consumer has longer to pay off the loan.
Okay, so instead of a
16-day, go to 31.
is the 16-day required, or is it just the average?
No, it's the
okay,
average.
so they pay it off with their next paycheck.
So they have more time to pay it off. So they don't have to worry about paying it off within.
But
the
they
next
can
pay
take
period.
extra time now, can they not, to pay it off?
Yes, they can.
If they're over. So I'm trying to get to
They can take up to 4 installments if
what
they
are the
wish.
things that you want done to the bill to enhance consumer protection?
Oh, I see.
And I'm just, to me, 16 days versus 30 days, it just does not seem to be a huge make or break situation.
Senator
Every
Kehoe.
time we have a payday lending bill, it's sort of the Hatfields and McCoys, okay? They work for some people. And, if you took 100% of the consumers of anything, you're going to find the outliers that underuse and overuse, aren't you? And I should have asked the customers that were up here, how often do you do it? The young woman with the child and all, but, I didn't. I don't know if she's still here. Oh, there's a customer. How often do you use it? You have to come back up to the microphone. Do you mind, Ron, if I ask?
Not at all.
How many times have you used the loan? You have to come up and speak on the microphone.
On the microphone.
Yeah.
You have to be on the record.
So after you got in that tight situation, after your mother passed away, how long ago was that?
Actually, that was about 3 years ago.
And how many payday loans do you think you've taken out since then? Can you recollect? 30? Are you near the top end?
I don't think it's been 30.
2?
Oh, more than 2, though. It depends on the circumstances, if I can say that. I do get paid once a month, so for me, it is a 30-day, 31-day on the check, and I do pay it back with my when I get paid.
And when you borrow, what do you borrow, 300 or 200?
It depends on my need. I've had occasions where I just needed $50.
And how much did you pay them back when you paid it back 30 days later?
I think it was like 57. And so just depending on the need, I just take out what I need. I understand some people do go in and
So several times a year you would go in, or do you have any idea how to guess it, how many times you've taken out a loan?
Oh, it's been a rough couple of years since the, and because I've had my own medical expenses come up. But I'd say 4 to 5 times maybe, average in the year.
And do you go to the same store every time?
Pretty much, yeah.
Okay, thank you.
Thank you.
So, you know, it seems to work for her. And I just wonder, you know, when someone is paying back, you know, $57 on a $50 loan, or $340 or $48 on a $300 loan, I think those are roughly the numbers. If they're just the average customer, it seems to me to be a service they're willing to pay for rather than a hardship. And I want to fully acknowledge there's some people that are, you know, trying to make ends meet with loans, which is, you know, it's an untenable situation. I get that. But for the people who want the service of the loan and appear to be able to afford it, what else would you like to see done?
Well, part of the problem here is, of course, there are people who need loans. That's not an issue. We don't quibble with
and
that.
they want it sort of easy. You walk in, it's a retail operation. I mean, the ones that I've seen anyway.
But the greater concern is what
You have a
happens
job.
when people can't repay these loans and they get into that cycle of debt.
And
then we're talking not just about a $7 service charge. We're talking about churning that service charge over and over and over. And as I understand it, and what the payday lending industry says, is that these loans are meant for occasional short-term use. But when someone gets trapped into a cycle of debt, it's no longer occasional, it's no longer short-term.
Right, I understand. But we are, you know, we're here trying to make some rules that work for everybody. And you know, if the sales pitches, it happens to be occasional from our customers, and it's really somewhat more than occasional, you know, that's, you know, very hard to get our arms around as far as statute goes. No, I mean, I am not, the argument about $500 maybe being a little too high, I'm sensitive to that. The auto, there are installment plans if they go over, right?
Yes, and we're suggesting that this bill be amended to include an automatic installment plan for minimum 6 monthly payments.
But they can actually pay 4 now, can't they?
Right now, my understanding is it's silent, okay? And each payday lending outlet works with their customers their own way. What the bill will do is put it into law that they have 4 payments. They'll be allowed to give them 4 payments if they need be.
Or whatever they work out. You know, the bill says, you know what, if you can't make the payment in 30 days, fine, come in. We'll work something out. If it takes you the next 4 months, okay, let's talk about maybe 2 months, maybe 1 month, whatever it is. No interest, no penalties, nothing. They get to pay that off in the next 4 months if that's what they need.
Okay.
They work it out with the lender.
Okay, I think that gentleman has a comment, and then I'm finished.
I just wanted to clarify. I mean, our communications with the committee have been consistent in terms of the amendments that we've been seeking. My colleague, Ms. Garcia, identified 3 of them, which were equitable remedies, a minimum loan term of 31 days, so that borrowers would have an opportunity not just to their next paycheck, but a minimum time to be able to absorb the additional costs.
And what is the minimum payment now in statute? Not the average, not what people do. What are they required to do?
The product as it's
whatever you get
so
paid.
it's whatever the business requires?
Hold on. Let's let Mr. Mendoza answer.
It is the pay period, Senator Kehoe. So if you get paid in 2 weeks, so it's 2 weeks. That's when you got to pay it back. If you get paid once a month, if you're a state worker, and then it's 30 days, 31 days. It's whatever your pay period is.
Right, and it is a balloon payment, right? No installment payments partial payments are not accepted. It's not. It doesn't go to installment.
My bill will do that for you.
The
Mr. Leonard, this is a ping pong here.
Yeah, bill will do that.
Could we perhaps, Mr. Chair, hear from Mr. Cole? It looks like he has some information on that topic.
Yeah, someone from the industry. Can you give us some?
Thank you very much.
Enlighten us a little bit here.
Current law permits you to do a deferred deposit transaction for up to 31 days, because some months have 31 days in them. There is no minimum set in law. However, the law does provide that if a payday lender...
I hate to keep interrupting.
Sure.
You just said current law requires a payment within 31 days.
Up to 31 days. That's a maximum.
So can the retailer require a shorter time payment if the customer signs for it, or what?
They could, well, it has to be mutually agreed to in whatever the time frame
Right,
is.
but if you
They
walk
might
in,
not-
you say, I need $100, and he says, okay, you got to pay me back in 2 weeks, not a lot of, maybe most people wouldn't know enough to say, I think I have 31 days, right?
They rarely ask for 31 days because it is a payday loan. They're often not in need of money during the first period. If you're paid on a monthly basis, you may not need something the first 2 weeks of that time frame. You may need it the last two. The average, according to this Department of Corporation surveys that's submitted by all the payday lenders, is 16 days is the average. And that's mutually agreed to, and that's the nature of the transaction. There is no minimum time payment. With respect to a payment plan, there is the ability under current law for a deferred deposit transactor to offer a payment plan. It does not specify the number of payments. It does not specify the time. Current practice is it's negotiated with the customer. Remember, this is the deferred deposit transactor, the payday lender's money that the customer has. If they think they have an opportunity to get it back by developing a payment plan, they're certainly going to do that. They're not going to put a check through they know is not good because they'll have to pay a bounce check fee as a retailer. It just doesn't make sense that there would be anything other than that.
Thank you.
Thanks.
You're welcome. Senator Lowenthal, you had a question?
Yeah, a couple of questions.
Only one. You only get one. Make it a compound question.
Make it good. When was the last time I saw Dave Cox's mother? Is that the question? The last time I saw Dave Cox's mother was... No, that's not the question. What I hear, one of the things that is one of the problems with the... And I have a couple of questions. One of the problems with the product is this repeated borrowing. I think, Mr. Leonard, you talked about the repeated borrowing. I think also the Representative Consumer Union, and that the FDIC guidelines, and you indicated in your letter of opposition, your number one issue that you identified, or at least the first issue that you identified, was that a borrower should be restricted from having payday loans outstanding from any payday lender for more than 3 months in a 12-month period. So whatever the number, you're trying to get at this repeated borrowing, and that people who are borrowing who already have other loans out there that we know. Would this not really require some kind of database system to be able to know this, how many loans are out there for all these stores? Are you advocating some kind of system like that? How do we know what's really... You go to a different store, is that okay with you, as long as you just...
No, the reality is that in most places that have implemented this have done it in conjunction with the database. There are some places that have considered models which would...
You mean states?
Other states, correct,
okay.
not within California. There are other states that have databases.
So you're recommending, really, is that the way to do...
No, our recommendation would be one that doesn't involve the creation and the expense of a full statewide database, although we certainly would be open to sort of considering that. But most of the payday lenders use a company called Teletrack that monitor these loans and that are used, that they will check with to see if customers have defaulted on a payday loan from another institution. And we think that using that as a reporting mechanism, providing the Department of Corporations with access to that, could be a simpler, cleaner, easier, quicker way of tracking the number of loans that a borrower gets.
Okay, so there's some. So that's one of your is this idea of the repeat and how you might be able to. So that's one issue that you'd like to see dealt with. The other issue that came up was we've already heard the questions about extending the minimum loan to 31 days and also the number of installments. The last question, though, in that is also, I think you also recommended, or I saw in the, maybe it was in the analysis, that in California, it is questionable whether the existing statute really allows for or authorizes internet payday loans. So are you willing to deal, the question is, if that was removed, if we remove the internet section, which is it's a questionable section to begin with, we address the issue about how you deal with repeat, and we dealt with these issues of to 31 days and from 4 to 6 maybe payments, would you be then supportive or remove your opposition to this bill? Yeah.
We would certainly. I mean, we have laid out the amendments that we would like to see, and if all of those amendments were adopted, we would remove our opposition.
Well, in life, we don't always get all. So the question is,
we're prepared to discuss.
That's right. I'm going to go ask, and that'll be my last question to the author. You've heard from Senator Kehoe and now from myself, and there may be others, what these critical issues are: the repeat borrowers, maybe a database, maybe an internet elimination, and the 31 days. And where are you on these, and how can we, because I think the sense is we'd like to go there. We're not there yet with these problems.
Thank you, Senator Lowenthal, for bringing that up. You know what? I'm open to it. I've been trying to work with them ever since they've come to my office when I first introduced the bill. All the amendments that they've been giving me were to kill this industry. And I said, no, that's not the point that I'm doing. You know, I got the Department of Corporation's recommendation. I'm putting them into code now, and not just out there as a study. And you're giving me things that are just going to put this industry out of business. That's not what I'm here for. And I even said, you should create your own bill and put whatever you want in there and take whatever you want from the corporation.
Well, I'm asking you of the issues that you've heard so far.
I am open to it. I'm not stuck on any of them. The 31 days, obviously, it goes by payday. Okay, extending it out to 6 plans. I mean, 6. The way the recommendation was from the Department of Corporations, it read that. And their option, the industry, to offer a payment plan for 6 equal months installments for borrowers who have continuously had loans for 3 months. We're giving them, if you can't make that first loan, you got 4 payments. You got 4 months to negotiate something.
Okay.
So my amendments are actually better.
And the other 2 issues are you willing to deal with is the FDIC, the recommendations about that really try to come to grips with this repeat borrowing. I suggested possibly a database that said, well, that may even be going too far. But some way of knowing.
The database issue came up, and we've talked to a few of the coalition members, and they were saying they have concerns about privacy, and they don't want to go there. So it's like, okay, well, where do we go from here?
Number of states, but there are models out there.
Well,
you
I
realize
understand that.
States like Florida and other states have already adopted systems like that.
Right.
So you'd be
But
willing to explore that?
I'm willing to talk to them about it.
And the last question is, would you be willing to get rid of all the stuff on the internet since that's questionable already in terms of state law?
And just to be clear, the state of California allows internet payday loan. Okay?
I do not think that it's authorized in existing state law. It may be allowed now, but that's because that's just by practice. I do not believe that that's. If I'm following the.
No, we call the Department of Corporation. It is legal for the state of California. The payday lenders have to go and they get a certain license to be able to borrow.
We have a crack staff here, and in the analysis, this staff said that it is, I believe, in the analysis that it is not clear whether that it's authorized or not.
It's not clear. The Department of Corporation is clear.
The Department of Corporations is not regulating or cracking down, as you say, on the internet lending, internet payday lending. So it's unclear. It's unclear whether or not it's.
Well, those are my concerns.
Right.
For me to support.
But I do. Before I go to some other questions, and Senator Padilla is next, and then Senator Cogdill, and then Senator Wilk. The repeated borrowing. Just from hearing from our witnesses today, I do not believe is the problem. The problem is people that go to 5 or 6 different payday outlets at the same time and give each of them a check. And then when it comes to pay, they don't have the money to pay them. That will put you in some serious problems, and I'm trying to. I'm struggling here.
Wouldn't a database help that?
Database would help that, and I'm what I'm struggling with, Senator, is that the Department of Corporations has had virtually no complaints. In 10 million transactions, there's been 66 written complaints from July 2006 to December 2007. I don't see the problem that you're presenting here. I mean, I'm sure there are people that get into financial mishaps, but this piece of legislation is regulating the industry. It's making it tougher for this kind of thing to happen when it's silent currently. We have to go in order. Senator Padilla, you're on.
A couple questions, but a couple of other things come to mind as I follow the discussion here. And the first, to the chairman's point, is I think there's an important distinction between real and rampant. The concern about the cycle of debt that, I'm sorry, Miss, when you spoke.
Garcia.
Okay, that you presented about whether it's an individual that's just caught up in a cycle and they borrow, a second time to pay off the first time, and it just grows and grows and grows, or people who are going to multiple outlets and getting these, getting in over their head that way. I'm not saying that doesn't happen, or I think that never happens, but I think so that's the real question. The other question is the rampant question. How often is that the case? And I've met with the folks representing the industry over the years in my capacity as a city council member, now in my capacity as a senator. I've been to at least one of those stores. And so some of the initial questions I ask whenever I meet with them is, and maybe this is a question to the author, as current practice, as current regulation that's in place is, what's the default rate from borrowers?
How many times do they don't make the payments on time? Right. Maybe I could ask one of the people who actually are in this industry to come forward and answer that question.
The Department of Corporations annual report indicates 4% default rate, of $115 million. Okay.
3%, 4%. Okay, yeah. That's
default.
So for me, I keep these conversations partially in that context. If the number is 3% in our analysis, that means 97% of the folks who come in to take these loans, as tough as they are, make good on it. And by the way, do we have a sense for what the average loan amount is? I mean, I know the law currently is up to $300, but I don't know if the average is $100, $150.
266.
That's 254 is it? Yeah, we'll get the first half. That'll be. Senator Padilla is asking all the hard questions today, right?
I just like numbers,
Yeah, that's good. That's good.
63% are between 200 and 255.
Is this discussion?
Okay, so but bottom line is we're talking about the upper ceiling, and the reason it's not 300 is because you got to build in the repayment fee, right? So when people ask, well, why isn't $300 enough? Whether we're going to 500 or 400 or some other number, why the desire to raise that ceiling? And I think practice has shown that when people borrow, not all of them, but a majority of them are borrowing as much as they can or close to it. So is there room for that ceiling to grow? Another thing that people sort of get caught up in is, oh my God, it's a 300%, 400% annual, percentage rate, whatever that times 12 figure turns out to be. But when it comes to a dollar figure, the fee they're paying, even on the max loan, is roughly, Mr. Author, 30-some bucks, right?
Yeah.
No, 45. $15 every.
It's 45 for the $300 loan, and then
$15 per 100.
Right.
15.
per hundred. So when I'm having a conversation with somebody in my district office, they don't talk to me about a 450% or whatever, the rate calculates to be. They're talking about a $15. That's their fee for the
$100
convenience or inconvenience of being in a tight spot. The other sort of perspective that we lay out here is, people don't come into the stores because they want to. People come looking for this type of help because they feel they need to. And if they're in a position that they feel they need to, it's because they're on the verge of, some payments being overdue. So what are the costs of being late on some payments? I think we've all seen the charts of the utility disconnect and reconnect fee, or the cable, or, all those other things. So, is the industry perfect? No. Does it provide a valuable service or option? It's not a mandate. It's an option for people. Absolutely. So I think the important perspective to provide here for this conversation is, for the folks who want to ban this practice, then, bring that bill forward. Otherwise, the conversation is how do we improve upon the industry as we now see it? I actually give a lot of credit to the association here, because they can debate whether or not they do a good job of policing themselves, but at least they keep coming forward with recommendations to codify solid industry practices, because the good players in the arena want the bad players out. And I think the elements of the bill before us have that. I will speak in favor of and echo some of the points that Senator Lowenthal made about the database or information gathering system. The more we understand about what's happening, I think the better for policymakers. But if in some way addressing privacy concerns and others, you can set up a system where people can't go to different chains or different companies for the same loans and sort of get themselves in trouble that way, I think that'd be helpful. And let me go on a limb and say, I don't think the lending community, wants that to happen either. It's not in their interest. So all that being said, I am favorable. I'm inclined to be supportive of the bill, but as the conversation is continuing, I hear that there's maybe amendments to be considered, this and that. Ideally, I'd like to see that in this committee, because I sit on this committee. I don't sit on judiciary or wherever else this bill may go, but certainly would want to consider that if the bill makes it to the floor, or when the bill makes it to the floor. So thank you, Mr. Mendoza. I know this isn't an easy issue to carry, but in districts like yours and districts like mine, it does serve a purpose, and we're doing our job not just to recognize that it serves a purpose, but to be vigilant and try to minimize the folks who may get sort of caught between the regulatory cracks.
Thank you, Mr. Do you have some more questions before we go to Senator Cogdill? To clarify, this bill is moving on to judiciary.
Thank you, Mr. Chairman. I'll be very brief. I support the bill. I support the industry. I think there's a real need that's being met by this industry. I would argue, as it relates to some of the concerns that have been voiced here today about loan sharking and some of the illegal activities that we know existed at one time and probably still do today, I would argue this industry has probably been pretty instrumental in keeping that activity to a minimum, or hopefully reducing it in some areas altogether. So, again, I think they serve a very valuable purpose. I find it interesting that of the testimony that we had today, we had a number of folks that have benefited from the service that's available and seem to be quite happy with it, and indicated that they are return customers for the service. But I didn't hear any individuals coming with any horror stories relating to their individual circumstances concerning the use of this product. And I think your statistics that you pointed out were very, very telling. I wish all consumer services had that kind of track record relating to the complaints that have been filed against them. I do have a concern relating to the 5-cent fee and how that will be used, and what tightening needs to be done there relating to how we use that 5 cents that's being put on the industry. I think it's important that we point that out. This isn't an additional fee being charged to the borrower, but it's going on the back of the industry, and they've willingly accepted that. My only concern is that it is ultimately used for what it's intended to be used for, and I think a lot of the concerns that were raised today, we should be directing that fee towards addressing some of those things, and maybe we could alleviate some of the problems relating to the need for more financial literacy among the borrowers. So that would be my only concern at this point. I understand there's going to be some amendments that will be looked at and hopefully taken in the next step, and I will watch those closely. But at this point, I am supportive of the bill and would certainly make the motion to move it.
Thank you, Senator. Senator Wolk?
Thank you, Mr. Chair. I wanted to say that, we've had these bills before, and I have been supportive. And I've also, along with my colleague, been to these stores and actually, just kind of stopped the customers and asked what they were doing, if they wouldn't mind answering a few questions, and they were very, very forthcoming. What struck me, and my district is not like yours, is that there was a lack of alternative financial product or instrument to meet their short-term needs. People were going from paycheck to paycheck. These were working poor. And there simply were not alternative products. That being said, I do believe that the issues that have been raised here and the recommendations of the Department of Corporations, I'd like to see I'd like to see those considered. And I'm concerned, Mr. Chair, you said this is moving on without taking amendments here. There's no time to have amendments looked at here in this committee?
Well,
not necessarily today, but next week.
we may be suggesting some here before we're done today, and we can always ask for the bill to come back to this committee.
I would like that
in the future. So,
all right.
Go ahead.
All right, then I look forward to hearing what.
Okay. And Assemblymember, not Senator yet, Assemblymember Mendoza has agreed to take the amendments that have been recommended in the
all right, and there were I noticed of all the recommendations, there were some that you did not accept.
From the Department of right.
And I wondered if you would explain those. There weren't that many, 6, 7, 10, and part of 12. And I don't have DOC in front of me. Maybe the staff can help with that.
There was we took
practically all.
Yeah, I took pretty much all. There's some that I thought we could just either didn't want to complicate the bill too much, didn't want to put too much on the bill where we have too much opposition and it would not get us anywhere. So I figured I'll get the ones that's the least. I don't want to say the least problematic, but the most that would allow the bill to move forward as much as possible, allowing us to provide financial literacy to our community, and at the same time make it a win-win situation for everybody. I've worked with the opposition, and if there's an issue, a particular issue that they really want out of this bill, I wouldn't mind working with them. The problem is that I just can't get them to focus. And they say, okay, well, if we move this, maybe we might be okay. I'm like, okay, and then what? To take this out, are you going to go something else? Well, we don't know yet. I have to go back and check it. Well, don't move it on me. If you really want to sit down and talk about what's wrong with it, let's work it. But when the first day they came into my office, they said, I want the 36% cap on there. I'm like, what is this bill is not about so that's the first thing they mentioned. I'm like, you know what? Forget it. I don't even want to go there. So I've taken many of these. I wouldn't mind maybe talking to them about other ones that they feel strongly about. I don't know. But again, when we started those conversations like that, it wasn't right. It didn't start off right. And I'm still open to it. There's internet information that if you look at my internet, it basically says you have to disclose the same thing as you do as a person, as you do in person. There's a payday loan person here, Fernando Peña, who does internet lending, authorized by the state of California. He's here to testify. He'll tell you that the state of California allows them to do internet lending. And I'm like, wow, and there's nothing out there. My bill would actually put some protections out there for consumers. But somehow they feel that this is a back door to do something else. And I'm like, okay, if I remove that, is there anything else? And I'm sure there's more stuff that will grow. And I'm willing to work with them. I just want them to be sincere and honest. And I haven't got to that point with them.
Realistic.
Thank you, Assemblymember. Mr. Chair, you said that you would be proposing some amendments beyond what we have in our...
Actually, Senator Lowenthal and Senator Kehoe is concerned about the internet issue and
the database,
possibly a database.
And we heard about the 5 cents tightening it up, making sure that it's. We took down those, and I will sit down with the opposition between now and judicial and try to work something out with them, because I don't want to move this bill along having their opposition. I get that, but I just can't. I just want to make sure that they're sincere about it. That's all. And because I'm more than open to work with them on any issue that's on this bill, as long as it doesn't go to the heart of the industry and they don't do it out of malice or trying to, because I know they exist for a purpose. I get that. But at the same time, there's a product out there in our community that my constituents truly need, and there is no alternative out there besides having good credit and going to the bank and getting a loan. Well, what's the problem?
You can't do that.
Yeah.
Exactly.
Mr. Chair, you will retain jurisdiction then over.
Yes. Senator Cox or Senator Cogdill? Cogdill and then Senator Cox.
Thank you. Just a quick word of warning, I guess, to the author as you start looking at the amendments that you're contemplating here. You've got the votes right now on the Republican side for the way the bill stands, I believe. The internet issue could cause you a real problem with our caucus. And being able to maintain our support for your bill. So, so you know.
Thank you. I appreciate that information.
That's a good point.
Mr. Chairman, kind of an interesting phenomenon occurs in a capitalistic society. The banks went out of the lending business to small borrowers and people who just needed a small amount for a short period of time. This product is a necessary product for a significant portion of our constituents. And Mr. Chairman, there's a presumption on my part that people borrow money because they need to borrow money. They just don't walk in there and say, can I get $100 and you're going to charge me $7 for it, or $8 or $20, and walk back out and have X dollars less in their pocket because there's a handling charge. People don't do that. People go in there because they need to borrow some money. They've got a critical need. They've got a funeral. They've got a medical expense. They've got a driver's license. They've got a vehicle registration. They go in there because they've got a problem. They don't go in there because it just gives them some sort of euphoric feeling to be able to go in and borrow some money. I mean, come on. Now, there was a discussion about this. These are payday lenders. And so the question is, and while I must confess to you, I've not been in one, but the question is, when do you get paid? Well, I get paid on such and such. Okay. All right, you need it for 2 weeks? We're going to loan it to you for 2 weeks. And if you get paid once a month, as state workers do, you then, in fact, can get a 31-day loan. It costs more to borrow money for 31 days than it costs to borrow money for 16 days. And so let's not overcomplicate this situation by placing so many burdens on this industry that you take them completely out of the business. They got in the marketplace because the banks got out of the business. By the way, gasoline stations got in the food business because of the aspect that got out of the garage business. It happens that way in a capitalistic society. Let's don't, and they do. But let's not get so crazy here that we in fact say to people, look, you got to pay to lend us the money. That doesn't make any sense. And is there a higher than interest product that you'd like it to be? The answer is yes. But the fact of the matter is they charge high interest rates because not everybody pays them back. This is not one of those feel-good kind of transactions. People go in there because they need the money. So let's not confuse, facts with some sort of fictional thing that we're trying to put in our society that just won't get the job done. And if you don't, thank you. Calls are being lifted in the Health Committee, room 4203. Well, I won't be able to make that then. But I'm not finished yet.
Is there a question in here somewhere?
No, but this is a statement.
Oh, okay.
Listen, if you don't want these people to do it, who do you want to do it? Is it a situation where you want to go back to the loan sharks where the guy walks around and he's got a pistol in his pocket looking for his money or shoot you in the kneecaps? What is it that you want? I'm done.
Thank you. Senator Correa.
Well, actually, let me paraphrase what Mr. Cox just said, because I think he essentially did the long-winded version of what I was going to say. But not that he's winded, he's an honorable senator, you understand. I'm just going to mention that I remember dealing with this issue back when I was in the Assembly, the chair of BNP. We went over and over this thing over and over, study after study, new studies ordered. What you're going to end up with is what you have today, which is this is not the ideal instrument you want to use to borrow money. You do not want to borrow money from a payday lender. Yet at the same time, as Mr. Cox has eloquently stated, there aren't many alternatives to some folks except for this. And, you know, in my area, and I can tell you where I live about 200 yards away from one of your little payday lending operations. I walk by it almost every other day. There's another financial institution that went up trying to do the right thing, and they're almost out of business. So those are the economics of the situation. If you have alternatives, great. If not, this is what you have. And as Mr. Cox said, it's either this or the loan shark or nothing at all. That's why I'll be supporting this bill.
Okay. Thank you. Any other questions, Senator Harman?
Well, as the Vice Chairman of the Judiciary Committee, I look forward to this little discussion since I'm the only one on this committee that gets that pleasure to see you folks again in a week or two. I don't think it's going to take 2 hours like this one has. Just a couple of thoughts and comments. First of all, Mr. Mendoza, the 5-cent industry fee, which the industry's agreed to, didn't I see in the analysis that that's basically for some type of education to borrowers? Is that your purpose? And
that is correct.
You've committed to maybe tighten that up a little bit more?
Yes, we had amendments in.
You know, this is a lot like we have an education fee for problem gamblers in the state. And,
yes, that's exactly true.
And it works. It helps out a little bit. I just did the math, 10 million transactions, 5 cents a piece, it's $500,000. A pretty good start on trying to get some kind of a program to educate people that, you know, maybe you shouldn't be doing this. But the thing that caught my attention is on page 6 of the committee analysis under discussion, where they go through the consultant does, the Department of Corporations recommendation number 1, and it concludes AB 377 implements that recommendation in its entirety. And then as you go on through to the next couple of pages, recommendation number 3, adopted in its entirety. Recommendation number 4, adopted in its entirety. Recommendation number 5, adopted in its entirety. Recommendation number 9, adopted in its entirety, and 11 and 12. You know, folks, we deal in compromises in this building, and this is a compromise. The author adopted a lot of these recommendations from the Department of Corporations. A couple of them weren't adopted, but you know, on balance, and also at page 9 at the bottom, it points out that this wasn't recommended, but it was included in the bill as a rescission period. They have I think one day to rescind the deal if they don't like it. So, you know, we've done, and then the 300 to 500, no increase for 13 years, and we're going to bump it up only $200. Those are nominal. So I think this is a good bill, and I'm going to be supporting it. I urge the committee to support it.
Thank you, Senator Harman. Any other questions by the committee members before we go on to our other witnesses? Opposition?
Michael Richard with AARP. I'll be very brief, given where I'm at in the testimony. We must respectfully oppose this bill unless it's amended on behalf of our 3.4 million members. We really would follow the lead of the Center for Responsible Lending. If they remove their opposition, we'd look at that. But this has a serious impact on our members. So thank you.
Thank you.
Mr. Chair, members, Caitlin Vega for the California Labor Federation, also here with an oppose unless amended position. I think that we clearly understand what Senator Padilla, Senator Correa, and Senator Cox spoke about in terms of the lack of options. And for us, that's what makes this bill incredibly important, because we're talking about a group of people that don't have very many options, and because of that, they are more likely to enter into loans that we believe sometimes have exploitative terms or don't have the necessary consumer protections. So we actually think when we're dealing with a community that has limited options, these consumer protections become incredibly important, and that is why we believe it's so important to amend this bill. We'd like to focus specifically on the internet piece. To us, that's a huge issue. We feel like there are enough risks and abuses that happen under existing law to legitimize and explicitly authorize internet lending. We believe would lead to tremendous problems. We know that just by virtue of the way it's done, the risks are greater. You're giving someone access to your bank account. They can continue to make withdrawals without your consent. It's much harder for a consumer, particularly someone who lacks financial literacy, to be able to track down that lender and sever the relationship. In addition, we know that there's a blog called Payday Industry Blog, which is actively promoting that payday lenders partner with tribal nations to have payday operations that can have sovereign immunity. We know that the Department of Corporations has sought to enforce California law for several years against internet lenders that have said, we don't have to follow any of your laws. And so we have enough concerns kind of about the way that things are done and the rates that are charged under existing law, but to have lenders coming into the market that are saying, your laws don't even touch me, we think is particularly dangerous. So for us, we would focus on the internet lending. We would focus on having a repayment plan that will legitimately give consumers the choice, that will be affordable so that people can get out of this cycle of debt, not take out 10 a year, take out 1 or 2 when they need them, and then pay them off, we think is extremely important. And lastly, we think that the existing loan limit is appropriate. We think that particularly when you're talking about low-wage workers, they're not going to be making any more money. They're making, their wages have been stagnant for many, many years. For the last 8 years, workers have seen no increase in their wages. And so if they're having trouble paying off $300, we think that they're going to have even more trouble paying off $500. So those are the issues that are most important to us. Thank you very much.
Thank you.
Mr. Chair, members, Deanna Furman on behalf of the California Nurses Association. For the reasons Ms. Vega already stated, we also oppose this bill and are opposed unless amended. Thank you.
Okay, thank you very much. Anyone else? Okay, seeing and hearing none, we have asked Assemblymember Mendoza to take the suggested amendments and the analysis, A through D. Do you agree to those?
Yes, sir.
Okay. We are also, I am reserving the right to bring this bill back to this committee. But I have also concerns, as everyone else has, in regards to the internet issue, the database issue, and other issues that have been brought forward. And would like to know if we have your commitment to continue working with committee staff on those issues as we move the bill forward.
Yeah, yes, sir. And I'll make sure that when I get to the the next committee, Judiciary, I want to make sure that I give an update of what happened from today to that point, because I will begin to have our talks again, and we begin to really, I want to see how honest and forthright they are about really working these issues out versus trying to kill an industry that's so vitally needed in our districts.
Very good. Yes, Senator.
I want to thank the chair, and I want to thank the author also for working through all this discussion and being open to amendments to the bill. I'm going to wait until I see the amendments down the road. It's keyed fiscal, right? So it's go to appropriations. Right. In addition to judiciary, so it'll be scrubbed. But I do appreciate your flexibility and paying attention to all the details.
Sure.
Thank you.
Great. Well, with that, let's call the roll. Move the bill as amended. You have a motion? It's moved already? Okay.
Calderon?
Aye.
Calderon, aye. Cogdill? Cogdill, aye. Correa? Aye. Correa, aye. Cox? Flores? Harmon? Aye. Harmon, I. Kehoe. Lou. Lowenthal. Padilla. Padilla, I. Runner. Runner, I. Walk. That's 6 votes.
6 votes. We need one more. We'll keep the roll open just a little longer. I know some members went down to health. Yes, Dave Cox will be returning. Do we have another bill on the agenda? Assemblymember Buchanan.
Thank you, Mr. Chair.
Yes, thank you. I'm sorry, Mr. Mendoza. Thank you for your presentation. Sure. Yeah, why don't we listen to calls while we're waiting? We'll go through the agenda in order, starting with
Item number 2, AB 329.
item number 2, AB 329, Fewer.
Okay.
Call the roll. Absent members.
Correa, excuse me. Aye. Correa, aye. Flores. Kehoe. Kehoe, aye. Lou. Lou, aye. Padilla. Padilla, aye. That's 9-2.
That has adequate votes. That bill is out, 9-2. Next item.
Oh, we did 370. So it's number 9.
Item number 9.
You want to do consent?
We did consent already, I believe.
Yeah, we didn't have all of them. Okay.
Oh, yeah, we can add on the consent file. Let's open the roll for that.
Okay.
Those are items 4, 5, 6, 8, 12, 14, 15, and
That's it.
that's it.
Okay.
15 and what?
That's it, 15.
All of them.
Call the roll.
Correa. Aye. Correa, aye. Flores. Kehoe. Aye. Kehoe, aye. Lou. Aye. Lou, aye. Padilla. Aye. Padilla, aye. That has 11 votes.
11 votes. Consent file is passed.
And then the next item is item number 9.
Item number 9, AB 1117, Fuentes. Call the absent members.
Correa. Aye. Correa, aye. Flores. Kehoe. Aye. Kehoe, aye. Lou. Lou, aye. Padilla. Aye. Padilla, aye. So 11 votes.
11 votes. That bill is out. Sorry, Senator.
There was a
Fuentes, yes.
I don't think I was in the room at the time.
Yes, you were, sir. The next item is item number 10.
Item
Number 2.
Item number
I'm sorry.
2,
Number 2. Item number 2.
Fewer.
329. Yes, you voted on
You already voted on that, sir.
Did I vote aye?
Yes, you did. I'll go back and
Reverse mortgages? No? Open the roll again on item number 2.
Number 2, you vote aye. Yes, you did.
Did you want to change your vote?
Am I?
Okay. Aye, it is.
Okay.
Reverse vote on that reverse vote?
Item number 10?
Yes.
Is that correct?
Yes,
Jones, call the absent members.
Correa. Flores. Kehoe. Aye. Kehoe, aye. Lou. Aye. Lou, aye. Lowenthal. Padilla. Padilla, aye. Correa, aye. That has 10 votes.
That has 10 votes. That measure passes.
Okay. And the next one is item number 11.
Item number 11, AB 1214 Nava. Call the absent members.
And nobody voted on that one. That was the one.
That's right.
Because we did that with the subcommittee.
That's right. None of us were able to vote at that time, so it's full roll call.
Calderon.
Aye.
Calderon, aye. Cogdill. Cogdill, aye. Correa.
Aye.
Correa, aye. Cox. Flores. Harmon.
Aye.
Harmon, aye. Kehoe. Kehoe, aye. Lou. Lou, aye. Lowenthal. Padilla. Padilla, aye. Runner.
Aye.
Runner, aye. Walk. Cox.
Aye.
Cox, aye. Which has 9 votes.
That bill has 9 votes. That bill is out. Call the absent member on item number 3.
13.
3.
Oh, 3?
Item number 3, Mendoza. Call the absent members.
Cox? Aye. Cox, aye. That's 7 votes, sir.
That bill is out.
Okay.
What item 13?
We're going back to that. Item 13. AB.
That's a,
Just on 13 again, you have me down on that bill?
13 is a consent item, sir.
It is? Okay, it's not listed here on that. No, 13 is not a consent.
No one voted on that one. That was the very first one.
Yes, no one's voted on that one yet.
That was the very first one.
We did not establish a quorum at that time. AB 1447. Call the roll.
Calderon?
Aye.
Calderon, aye. Cogdill? Cogdill, aye. Correa? Aye. Correa, aye. Cox? Aye. Cox, aye. Flores? Harmon? Aye. Harmon, aye. Kehoe? Aye. Kehoe, aye. Lou? Lou, aye. Lowenthal? Padilla? Runner? Aye. Runner, aye. Wolf? That's 8 votes, sir.
Got one more bill to present?
That bill's got 8 votes. Yeah, we have one more bill. That bill is out. We're still, could someone track down Assembly Member Buchanan?
She's in education.
She's on her way. Senator Lowenthal, did you want to, we kept the roll open if you wanted to.
Mr. Chair?
Yes, sir.
Mr. Chair, item 1, AB 33,
Yes.
I don't think I voted on that. Oh, it was pulled?
No, that was pulled.
Okay, thank you.
Put over. Yeah. I think he needs to go on most of it. Yeah. Are you going to open up on He'll be right back.
AB 1447. Lowenthal. Oh, okay.
Here.
This is
Hold on. What item number is it?
That's item number
Here. 13, that's John Perez.
Lowenthal, aye.
State compensation.
Okay. Lowenthal, aye. Walk,
Item 13. Pettis. Workers' comp. Or state comp.
Walk, aye. That's 10 votes.
10 votes, that bill's out.
Okay.
How many votes do you need?
7.
7.
Lowenthal, this is for AB 1214.
1214 is what?
Nava, yeah.
Nava. Lowenthal,
Lowenthal, aye.
Lowenthal, aye.
Item 11, Nava.
Lowenthal, aye.
Walk. Walk, aye. That's 11 votes, and that's a due pass as amended.
Do pass as amended, that bill's out.
Mendoza,
That's 3.
Yes.
Item 3.
Item 3,
Well, he-
call the absent members.
Okay, he's out,
and did I do Jones? I thought I voted.
okay. Item 3, AB 377, Lowenthal.
How many votes does it have? One, two.
It's had 7 already.
So it's out.
Uh-huh.
Not voting.
Okay.
Okay.
Okay. Walk?
I
You
checked.
don't- Okay,
I checked and I gave it back.
okay. You say no?
Did you
Say
get?
no.
Okay. Walk, no. Okay. It's 7-1.
We learned this from Dave's mother. At her knees, we learned this.
Okay.
Okay, you want to take some time and make sure you get everybody.
Where is this?
This is 1179.
1179, Lowenthal.
Lowenthal, aye.
What about the
At 11 votes, let's do pass.
Was I on the consent?
Is that, did I vote on that?
Yes.
Yeah.
Is that it?
And Buchanan? Did we vote on
No, she's not even
Oh,
here
she's
yet.
not
She
even here.
hasn't presented. She's on her way.
I have a state allocation. Right across the hall.
Okay, okay. If not, we'll just close it.
Yeah, just close it. I'm right across the room. They give you state allocation.
They said she's 30 seconds away. Yeah. Yeah. Yeah, I appreciate that. Yeah. Yeah. Huh? Yeah. You know, we could put the bill over to Monday. Huh?
We do have a hearing on Monday. We'll be off the floor, meet.
She said this is the final day notice.
I'm out of here.
Oh. We'd have to.
File notice issue.
It's a file notice issue. We'd have to put it off to the 1st.
And it's dual referred.
You're here.
I'm here.
She was here.
She was here for quite a while. But we were grilling Mr. Mendoza on this.
Yeah.
There she is.
Here we are. Madam Buchanan, can we get this started, please? Thank you.
I apologize. I know not to
We
be after
understand.
Tony Mendoza.
Please begin.
Thank you very much
Yes.
for accommodating me, and I appreciate the ability.
Thanks for your patience.
Well, thank you, and I appreciate the ability to be able to present this bill today, and hopefully I'll be brief and quick. AB 483 is simple. It directs the Workers' Compensation Insurance Rating Bureau to create and maintain an online searchable database for employer worker compensation coverage. The bill requires the insurance commissioner to adopt regulations for the database by January 1, 2011, and the website to be operational 180 days after the effective date of those regulations.
Been moved.
Currently, individuals must request this information in writing or email from the Workers' Compensation Insurance Rating Bureau and pay an $8 fee. In the information age, it makes sense to provide this information online so that workers, employers, and the public have easy access. 33 states already do so. Florida and Mississippi have actually studied the impact and found savings by providing public access for verifying workers' compensation coverage. AB 483 is sponsored by the California Labor Federation and supported by the Department of Insurance. It has no opposition and passed out of the Assembly with a 73-0 vote. We recently amended the bill to require that the website include the date that the site was last updated, and allowing individuals to know how current the information is that they're viewing. Here with me in support today are Angie Way from the Cal Labor Fed, Jeremy Smith, and also Dan Filizzato from the LA District Attorney's Office. Thank you.
Your comments are appreciated, and there's a favorable outcome on this bill, so keep
Mr.
that
Chair
in
and
mind
members,
during your
Angie Way, California Labor Federation, in support. Thank you very much.
Thank you.
Mr. Chairman, members, Dan Filizzato on behalf of Los Angeles District Attorney's Office. Happy to answer any questions.
So David Link with the Department of Insurance, in support or dry vote?
Deanna Furman on behalf of the California Nurses Association, also in support.
Any others like to testify, support, or opposition? Seeing and hearing
Mr.
none,
Chairman.
any questions by the members?
Mr. Chairman, let me just say to you that the problem I have with this bill, and I'm not sure it can be fixed today.
Okay.
But it is a situation about the timeliness of the information. And to the extent that you post something on the internet and it is stale information, may very well put the organization in an untenable situation. You know, if you don't renew your automobile insurance, immediately the Department of Motor Vehicles knows that you haven't renewed your automobile insurance. My concern about this bill is not that the genesis is not a good idea, but this information is not guaranteed to be up to date. And what the governor, I believe, said in his veto message last year, said that I'm concerned that the website would not be required to post the effective dates of coverage of a policy, therefore significantly diminishing the value of the information. More importantly, the bill does not contain any specific timing in which the information must be updated. Now, I don't know whether you changed the updating or not.
Well, that's why we've worked with the governor's office, and that's why we've included the amendment to show the date the website was last updated. I mean, you could renew your auto insurance tomorrow and cancel it the next day, but
And the DMV will be notified immediately of that.
Right.
As soon as the insurance company, you don't pay your premium or you don't renew your policy, DMV is notified. The problem with this bill is that the aspect of how fresh the data is. And, you know, if the information is not fresh, the brush paint's fairly wide.
Well, right now it takes weeks to get any information back from...
And that may be true, and we certainly would always want to err on the side of, in fact, recognizing that databases, when they're not up to date and current, work to the disadvantage of the organization that's attempting to do business with respect to having workers' compensation. I just am concerned about having a website that might very well have a data information that was not stale. Now, you know, when you go on the internet now, you Google something. I mean, you go back to 1996, you can go to 1955, you can go any place with this. And I'm always concerned, not just this bill, but other bills, when you have a web-based, if it's not current information, it's at a disadvantage to everybody who's relying on it.
Senator Cox, let me respond to that in assisting you, Assemblywoman Buchanan. The DOI, I mean, they're the cops. They have to make sure that this update occurs, and it occurs in a reasonably quick fashion. In the bill, the internet website, it says, shall be updated to reflect policy information as soon as reasonably feasible following submission of that information by insurers to the rating organization as the commissioner shall require. And the commissioner is the comp, and he's supposed to address that.
All right.
Okay.
I see, Mr. Chairman, you don't understand the problem, so there's no need for me to say any more.
You know, just a comment. It seems to me like it's simple sunshine, giving people the opportunity to find out some information. And as the chairman said, you know, the Commissioner of Insurance is in charge of promulgating the regulations. I'm sure he's going to be stringent in requiring accuracy.
This has to do with providing information and then telling the individual on when it was updated. And you know that if you get something 30, 60, 90, 120 days or 6 months late, if it's stale data, it creates a disadvantage for everyone who participates in the program.
I don't think the answer is no information, though, and I think the website will be a good...
But if it's wrong information, Ms. Keogh, if it's wrong information, you haven't served anybody well.
Well, with all respect, the Insurance Commissioner, one, has an obligation to update the website and keep the information as current as possible. And I just want to give you my perspective as an individual homeowner. If I were to hire a roofer to put a new roof on my house, right now, if I wanted to know if that roofer had workers' compensation, I'd have to pay $8, submit an inquiry, and wait weeks to get that information back. You know,
You might ask him if he had workers' compensation.
Absolutely, but this would also allow you to go online right away and to verify coverage.
Yeah.
And I think it's going to be an asset to consumers, to employers, to people in all fields. And in the information age, it just makes no sense for us to continue to have functions be primarily manual at the state level. We need to convert and allow people greater online access.
Yeah, I don't think we're going to agree with Senator Cox, so let's move on. Senator Correa?
I just wanted to say that clearly there's nothing wrong with sunshine yet. The dangers of having inaccurate data will hurt a business. And I would ask you and encourage you to work to come up with some kind of a mechanism that protects it. We had the same situation with the Bureau of Automotive Repairs, where you had some inaccurate data and people were getting sued on that data. So you want to make sure you keep the good aspects of your bill, but making sure that you don't end up hurting honest-to-goodness folks who do comply with the law and end up being penalized because of inaccurate data.
Well,
I don't know the answer right now. I think there's a number of ways to look at it, but just,
Can we get a comment from the DOI first?
So, these are very good points, Senators Cox and Correa. And I would imagine that the regulations that we're in charge of promulgating, this is one of the things that we will take into consideration. There also is, in the bill right now in the latest amendment, a provision that the website has to state when the last time it was that was updated, so we will know, to the extent that it is outdated, how far outdated it is, so that there will be at least some period when we'll be able to say, if someone is incorrectly listed on there, they can say, well, subsequent to the date that the website was posted, I updated my policy. But we do, I appreciate the problem.
Did you have a comment?
Thank you, Mr. Chair and members. Angie Way on behalf of the California Labor Federation, and we are one of the sponsors of this bill. And we believe that both you senators have identified a real issue that we've tried to address in this bill. One is, as Mr. Link has identified, the last amendment we just took, last date updated on the website. Two is that we've given in the bill language discretion to the insurance commissioner to provide to create a dispute resolution process for an employer or business to dispute what's on the website. Third, there are also disclaimers listed on the website about how accurate this information can be, that you can't use it for litigation purposes. We also tried to go down the path of looking at whether or not we could put on the expiration dates on the websites, and that gives, frankly, the broker some pause, moving them to an opposed position. Their concern is that
becomes a prospecting database.
That's exactly right. So we completely appreciate the concerns that in a free market competition. But we appreciate the concerns that you have both raised. We've tried to address them as well as we can to tighten down the database so that it's as accurate as possible. There are some problems with when employers or brokers turn in that information to both the Department of Insurance as well as the Rating Bureau that creates the underlying structural problem with this type of information being consolidated and transparent. But we feel that we have tried to work with all the stakeholders to put in as many protections and flexibility for the regulator to address them in the regulatory process. Thank you.
Thank you, Ms. Way. Any other questions? Senator Cogdill.
Thank you, Mr. Chair. I think the bill is well intended. I guess my concern would be with the unintended consequences that have been pointed out by some of the members of this committee, and I'm wondering if we couldn't request a report back at the very least on how this is working to make sure that we're achieving what it is we set out to achieve, and provide contractors the opportunity to certainly voice any complaints that they might have with how the system is working or not working, and also hopefully for the opportunity for them to be able to verify for themselves that they, on the website, that they have the insurance in place.
It's a good idea. Well, when is it implemented?
Regulations need to be adopted by January 1st, 2011, and then the website's up in 180 days after that, I think. So 2 years after that, staff recommended.
I think that's fair.
Very good. Thank you.
Thank you.
Should we make that? Can we make that an amendment? Is that possible? Why don't we add that as an amendment, and we'll need a motion as amended on the bill. Okay, great. I think we are at a point where we can vote on this bill. Open the roll.
Calderon?
Aye.
Calderon, aye. Cogdill? Cogdill, aye. Correa? Correa, aye. Cox? Cox, no. Flores? Harmon? Kehoe? Kehoe, aye. Liu? Liu, aye. Lowenthal? Lowenthal, aye. Padilla? Padilla, aye. Runner? Wolk? Wolk, aye. That's 8-1.
8-1.
That's a do pass as amended.
Do pass as amended.
Thank you. I appreciate your time and your patience. Thank you very much.
Thank you very much. Do we have any other? We're done. That concludes our business today in Banking and Finance Committee. We are adjourned.